Hello traders, in this video we're going to be taking a look at the ADX indicator. So I'm going to attach it to my chart here. This is a EU 1 hour time frame chart. So the average directional movement index indicator is free with most trading platforms. Going to use the default 14 period. And I've also added a 20 level. I'm going to show you why now. So there's the ADX on the chart. And basically this indicator has 3 or 4 lines that you need to keep your eye on. So we have a green line and a red line. The green is the plus line and the red is the minus line. What we're looking for is when the green line is above the red line, it suggests that we are in an uptrend. And vice versa, when the red line is above the green line, it suggests we're in a downtrend. This line here, the main line of the ADX, is the strength of the trend, whether that's an uptrend or a downtrend. So I like to use the 20 level, and anything above the 20 level suggests that the trend is gaining some momentum. So as you can see, for example, in this downtrend here, where the ADX red line crosses above the green line, and the main line is above the 20 line, shows that this trend had plenty of strength in it. Not only there, I can move this line across just to show you above the 20. There can still be a strong trend when this main line is below the 20. However, it's gathering momentum when it's above 20 from my experience. And again here, where the red is above the green and the 20 main line is above the 20, okay, still momentum left in this downwards trend. Okay, so that's the basics of the ADX indicator. As I said, you want to be looking out for the position of the red and the green line. If red's above downtrend, green's above uptrend. And then the main line shows you basically the strength of the trend. The ADX can be used as a filter just to determine, okay, the ADX is showing there's a downtrend, so I'm going to look for sell trades, or the ADX is showing an uptrend, so I'm going to look for buy trends. The reason I say that is because you don't want to necessarily use it for the entry or the exit by itself, because as you can see here, in this situation, you could be chopped in and out of the markets, buying and selling, basically chasing your tail. Which is why you can combine it with other forms of market analysis, which I'm going to cover now, just to help you get the best out of the indicator. So what I would do in this scenario here is we have resistance. We can see clear resistance here. Okay, price rejected this level. The price is getting weaker here and starting to fall, which you don't necessarily need an indicator to show you that. You can just look at your charts and see that that's the case. Okay, and what I would do is I would mark a support level. Okay, so for example, this level here, 1, 2, 3, 4. Okay, and you can see this level's holding up well. Let me just I can leave that one on there actually, because that's the ADX position. Right, so once we have the resistance marked off and the support marked off, This is what we're going to say is the range where there's consolidation, and we're going to wait for a breakout to the downside. Can remove that trend line. It's clear that it's going down to the downside, and use the ADX as a confirmation tool. Okay, so as price came to this support level, you can see it was testing it a few times. Then we had a few candlestick patterns here, particularly the pin bar there, the doji, marketing decision. Basically, what these candlestick patterns are showing is that there's a good chance that the bears are winning the battle with the bulls, and that the markets are going to continue to fall. As you can see, following on from this spinning top candlestick pattern, a spinning top being where the body is small and the wicks are long. This is a bearish spinning top close to the support level, which was breached, and you can see the impact that had with that big downwards candle there. Okay, and the good thing about the ADX is the crossover occurred in conjunction with that particular candlestick pattern and the breakout of this support level, all being good indicators of a short trade. Okay, now you could have taken the trade on the breakout of the support level, or you could have waited for confirmation, the candle to close. Some may have even waited for a pullback. In this instance, you would have been probably in around here, which is quite late. Nevertheless, let's just say we had enough evidence here to suggest a downwards trend was going to continue. Okay, and we entered on the breakout of support. We could have had a stop loss around 10 pips, the other side of that support level. When you see, okay, that would have been a good trade for over 170 pips with a relatively tight stop loss. I mean, a 10 pip stop loss on the 1 hour chart time frame is really good. And that gave us a really favorable risk to reward ratio. We could have trailed our stop loss on the way down. Remember, entries here. We could have moved our stop loss with support and resistance. So the support becomes resistance around here. As price continued, you could have brought your stop loss down to just above this area, and so on and so forth, this area here, and you could have maximized this move all the way down to here. There were signs that the trend was exhausting with these candlestick patterns here, consolidation, and the ADX. Again, what I was telling you about this main line, when it's above 20, it shows that there's momentum in the trend. As you can see, when it fell below 20 and stayed there for a significant amount of time is when the momentum in the trend started to come to a halt. Again, further indication to exit this trade. If that's not enough, this support level is holding up quite well. So that would have also been confirmation, not to mention you would have made a good profit had you taken the initial entry based on the ADX, support breakout, spinning top and other candlestick patterns there. Just trying to reiterate the importance of combining various forms of market analysis. You don't just want to rely on a technical indicator or price action. I think a combination of everything, as well as keeping an eye on the news, try and avoid trading against any high impact news. Have good sensible money management. I like to cut losing trades short, let winners run. This way you're not chasing your tail. So yeah, let's go back to the entry point. It's around here somewhere. Okay, so the ADX. There was another entry here. Well, to be honest, I mean, the price had crossed. Oops. To be honest, looking at this, the entry was more around here. Granted that the ADX mainline was below 20, but this is not set in stone. I mean, if we have this scenario where it's below for a while, then I'd probably want to avoid trading, because it's, unless I'm trading the reversals in a ranging market. But we're trying to capture the trend here, so I would have still been confident on this crossover here. And the reason I say that is because we can see as well the resistance has built up again. Price is rejecting this level. Big inside bar there. I mean, that's whether you want to trade off the resistance or you want to trade a breakout of the support. 1, 2, 3. You know, either way, there's ample opportunities from the ADX signal here to suggest this is a potential entry point compared to this area here where the red line is below the green line on the ADX. So as you can see, it's a great technical indicator for time and entry, filtering trades. But as I said, I wouldn't use it on its own. Let's see if we can find another example. Well, here's one right away. We have support there. Let's see. Okay. Crossover here. Momentum. Yeah, there would have been some juice left in the tank on that. You know, based on the ADX cross here, the momentum upwards. I'm ignoring this one because it's going in a downwards trajectory, but also because personally this trade I would have maybe avoided anyway because of the resistance around here. I mean, we don't know how price would have reacted around this area. You want a scenario really when it's you have a free run without any immediate support or resistance in your way. Yeah, going back to, this was a real good trend, this one. Okay, let's see if we can find a buy. Okay, there you go. Another good example. So we have support here. Clear as day, a support level. ADX, green line cross above the red line. Momentum, upwards momentum. Higher lows here. Nice bit of divergence for the higher lows on the ADX mainline there. Again, suggesting a uptrend. Yeah, and we could have timed our entry. Let's have a look. Oh God, maybe you might have wanted to wait for this recent level of resistance to be reached. You can see when it was. It's a nice breakout there. Real strong momentum and a strong uptrend. You know, that's some good indicators there. Again, pin bar, this spinning top candlestick pattern, bullish one this time, suggesting upwards momentum. Strong bullish market. And yeah, another good trade based on the ADX, but not just taking the ADX blindly as is, although in this example you could have done that and got in earlier. But if you just go back a bit and you see where the ADX cross is here and here, you can still get whipsawed in and out if you don't use additional analysis. Let's put the stochastic on there. Okay, another way you could use the ADX is in conjunction with other indicators. Let's just take the stochastic, for example, here. So with the stochastics, this indicator here, anything over here is considered overbought. So the market might start to head down, and anything here is considered oversold, so the market might start to head up. You want this main line to be on the other side of the signal line, downwards for a downtrend and upwards for an uptrend. And usually when a crossover happens in the extreme areas below 20 or above 80 is when you would consider taking a long or short trade. It's not set in stone. You can still get some good trades outside those levels, but it can be a good way to filter opportunities. So let me just clear off these objects on the chart. Right, so stochastic crossover here in the extreme sold area suggests the market will be going up. ADX, red line above green line, upwards momentum above the 20 level, potential entry point right there. It's on a pullback as well, which is great. Potential level of support. Well, resistance comes support here, you can see. Again, a good trade on a pullback there. So, well, you know, over 100 pips with that nice spike there. You could have used the other side of this resistance come support level to have a relatively tight stop loss. But yeah, there are many ways you can use the ADX indicator, whether on its own, with price action, support and resistance, candlestick patterns, or if you want to combine it with another indicator for extra confirmation, you can do that also. As I said, I find it works best for market trends. Yeah, well, that's basically it in a nutshell. Hopefully this has given you some inspiration for things you can implement within your trading strategies. I'll be doing more ADX videos in the future. Thank you for watching. Please like and subscribe for more.